Welcome back to the channel that simplifies the stock market. Now, it is my intention and my goal with these videos that I'm able to give you the knowledge and things to look for within the stock market so you have full confidence when you go into the stock market and you choose companies to invest in for yourself. Now, you can think of my approach sort of like, instead of me giving you the fish, basically giving you the list of companies that are in my portfolio that have performed well for me, I instead want to teach you how to fish so you can go out and again have that full confidence when you pick your own companies. I'll teach you the fishing spots and things that you should look for when you're looking to invest in the stock market and pick certain companies. So that brings me to the topic of this video, which is stock price movement. Now, I got this idea or the inspiration for this video, so to speak, from a friend who's actually looking to dive more into the stock market. So he came to me and he asked me, he said, Yanni, now I watched all your videos, I understand PE ratio, I understand market cap, and I have a general understanding of the stock market, but how do stock prices go up and go down? So I said, yeah, that is something that I had to think about and I had to learn when I was first starting out in the stock market. So without further ado, let's get into stock price movement. Now, in order to explain this concept more fully, I first want to use a different scenario. I want to use a scenario of an auction on a painting. And this painting is called The Tree by yours truly. So you see the tree and you say, hey, I have to have that painting. I want it in my household. I wanted to hang it up on my walls. I got to find a way to get my hands on this painting. So you find out that this painting is actually going on auction in a couple weeks. So you say, hey, I'm definitely going down to the auction house so I can bid on the tree and I can bring it home with me. So the few weeks passes by, you go down to the auction house and then you see the painting on display. It's not set to go on bid just yet. It has a couple hours, but you see it on display and you're just looking at it. You say, hey, yeah, this is the tree. It's going home with me. I want it, right? But you look up and you look around and there's a problem. You see 100 other people looking at your painting, the tree, right? And it's obvious that everyone is interested, even though everyone around is trying to do that nonchalant thing, trying to act non-interested, but all of you are interested in the tree. So right then and there, you realize, oh wow, okay, if I want to bring this home with me, I'm probably going to have to pay a pretty penny because it has high demand around. Cool. So let's say in the few hours passes by and the auction is on the auction block and it's set to go and start the bid, right? So the man, you know, the fast talking man that goes 35, 35, 35. All right. I forgot his name. I don't know what he's called, but let's say he says, all right, we're next going to put up the tree on auction and the starting ask is $3,500, right? So he starts off saying, so we're going to start off at 35, 35, 35. You raise your hand, I want it for 35, right? But again, remember, there were other people that wanted the same painting. So when he says, all right, I heard 35, 36, 36, and then other people raise their hand, 36, and this keeps going on, 37, 38, 5,000, 10,000, 15,000, and let's say it gets up to 25,000. Now at 25,000, other people start to drop off. They're like, hey, I wanted the tree, but you know, I'm not willing to pay 25,000 for it. But you are still in the running. You're still bidding because you want to take home the tree, and you say, hey, I don't care what I have to pay for it. I'm bringing this home with me. So it goes on, 26, 27, 28, other people are raising their hands, and finally it gets up to $35,000, right? And that is your final bid. You say, I want it for 35, right? So this is your final bid. $35,000. And then it says going once, going twice, sold to you. So you get the tree for $35,000, you're happy, you walk away, and you have your painting. Now, I want you to keep this concept of the auction in mind when I now go over into the stock price chart, draw that out for you, and explain that in detail. Okay, so what I've done is I've actually drawn out a stock price chart, and we're going to say that this is the stock price chart of XYZ. Now, I'll go ahead and briefly explain the construct of the stock price chart. So this is the y-axis, and on the y-axis you have the prices of the stock, whether it's going to reach these or not. And then on the x-axis, you actually have the hours of the stock market. So the regular market hours for the stock market is 9:30 a.m. to 4 p.m. Monday through Friday. It's not open on weekends and it's not open on holidays. Now you have aftermarket hours and pre-market hours, but for this video, we're just going to exclude those and just worry about the regular market hours, right? And this is a one-day stock chart. Now, if you go back and you think back to the example or the scenario of the auction on a painting, you can apply that over to here. Now let's say company XYZ is an exciting company. It is the company of the future. Everyone wants to be part owner of company XYZ because it has the technology that is going to take us into the next wave or whatever the case may be. Everyone is excited. Revenues have been growing, earnings have been growing, and everyone wants to be a part of XYZ. So we're gonna set it up the same kind of way as far as we have askers and bidders. Now the askers, they already have the stock, they already own it, and they're wishing to sell. You don't know why they want to sell, but they're wishing to sell. Now the bidders, these don't have the stock already and they wish to buy it. They want to become part owners in the business. Now again, this business is exciting. Everyone wants to be a part of it. It is the darling on Wall Street. It's all in the tabloids and news. Everyone has their eyes on it. So let's say that the number of bidders, right? This is just the number of bidders, not the actual price for the bidders, but the number of bidders is 100. Now let's say, again, there are people that actually want to sell it, but this is a great company, right? The people that own it, they don't want to sell it because they want to continue to own it and get the profit and the cash from this business. So you never know why these people, want to sell it. Maybe they need the short-term cash, whatever the case may be, but they want to sell it. But you can see that the number of sellers is much less than the number of askers, right? Again, this XYZ has a lot of demand for it. So let's say the market opens, boom, and the first seller comes out and say, hey, I want to sell my share of XYZ. This little square would be the share, right? So he said, hey, I want to sell my share and I'm going to ask for $50. I will sell it to you. I'll put it out there and sell it for $50, right? So they say 50, and then the bidders, they start competing. They say, hey, I want it at 50, I want it at 51, 52, 53, and they start bidding on it and competing with each other. And let's say one of them actually finally wins out at, let's say, $60 per share, right? Boom. So you have a $60 per share, and it's like, boom. So they agree on the price. He sells it. He initially asked for $50, but he got $60 per share. Cool, happy. Right, now let's say the next asker comes along and says, hey, I want to sell my share as well. Now the last price was $60 per share. So of course, he's not going to come in and say, hey, I want less than $60 per share because this stock has a lot of demand for it. So he's going to ask for at least $60 per share. Right, so he comes in and says, hey, I want to sell mine for $60 per share. And then these bidders, they get to competing again. Hey, I want it for 65, 70, 75, 80, boom. And let's say that they bid and finally one of them wins out at $90 per share. Right, so that's a 50% price appreciation from $60 per share. I keep dropping stuff on my board to $90 per share, right? 50% price appreciation. And because of that, right, something interesting happens. The number of askers goes up, right? Because they're attracted to the price that they can sell it at, right? Before they said, hey, before I could sell it at 60, now I can sell it at $90 per share, and they might have bought it a while ago at $20 per share, or whatever the case may be. So in order for them to realize that profit, they're looking at it and say, hey, I want to sell my shares for $90 a share. And then on the flip side, the bidders, they may drop, right? Because now they're looking at it like, hey, it was attractive at 50, at 60, it was still attractive. But at 90, I don't really want to buy it at $90 per share. I don't think it's worth it. Or that's just too expensive for me. So some of them drop off, but you still see that the number of bidders outweighs the number of askers. So demand still outweighs supply, right? So again, one of these askers comes out and says, okay, I want to sell mine, and again, the last price was 90, so they're not going to ask for less than 90. They still see the demand, and they said, hey, I want at least 90. So they start asking off, and the bidders say 90, 95, 100, boom, whatever the case would be, and then they win out at, somebody wins out at 115. So went out, and then again, you see that, whoa, the sellers are saying, hey, before, again, a little while ago, I can sell it for, well, we'll make it 120, right? I can sell it for 90, but now it's at 120, right? And they're like, oh, that's attracting more sellers. They're like, oh yeah, I'll definitely sell mine for 120. So you see that the number of sellers goes up, right? And the bidders, they're looking at it like, hey, I mean, I wanted it at 60, right? At 90, you were kind of pushing it, but at 120, I definitely don't want it. That's 100% price appreciation. So this number goes down to 20. Now, the supply outweighs the demand, so things are flipped. So something interesting happens, right? Because the askers, they put their shares out. Hey, I want at least 120, but not everybody is bidding and biting on it as they were before. So what happens is they say, hey, I still want to sell mine. I still want to realize this profit, this appreciation in the price. So what they start to do is they start to compete with each other and undercut this price and try to undercut each other. So the next one might say, hey, I'll sell mine instead of 120, I'll sell mine for 118. And the next one says, well, I'll sell mine for 117, 115, and it goes down to 100. And then one of these say, okay, I'll buy it for 100, right? But now you can see the price movement, how it can go up and down, and then this will be going on and on and on all day from 9:30 a.m. to 4 p.m. every second of the day, and that's how you end up with a price chart that does this, boom, 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 because this is the thing that is going on all day. Stock price movement. Now, in order to see the real world application of this, I pulled up Apple's stock in Yahoo Finance. Now it's now 9:51 a.m., so it's been 21 minutes since the market has been officially open, disregarding pre-market hours, of course. But you can just see some of the concepts that we talked about as far as the stock price. So this is the price that buyers and sellers have agreed upon in order to trade Apple stock. You know, they're bartering right now. And this is the bid, right? The bid saying, hey, this is what the buyers are saying. Hey, this is what I'm willing to buy Apple stock for. And the ask is the seller saying, this is what I'm willing to sell it for. So you see these numbers, $135.50. This is dollars times 3,000. This is just an individual order. Someone said, hey, I'm willing to, or I want to buy 3,000 shares of Apple for $135.50 each, right? And the ask, same concept. But I don't think Yahoo Finance does a good job of real live streaming these because these haven't changed and they're not up to date with this actual stock price. But again, that's just the same concept behind it. Now the volume shows you how many shares have been bought and sold, like how many shares have been exchanged. So you see it's 13 million. Again, this might include pre-market, but you can just see how much shares and how much action is happening right now since the market has been open. And then the market cap, you won't see the market cap move because it's 2.3 trillion. You won't see the adjustments because it's such a large number. But of course, the market cap is tied into the share price. And then with the chart, finally, you can see that the chart is actually being drawn out right now. It's being drawn out live. The last point should say 9:52. Yeah, it'll update pretty soon. But you can see at 9:52 a.m. the price was $134.86, and it just updated. But by the end of the day, this whole chart will be drawn out, whether it will go up or go down or whatever the case may be. But yep, that's the concept of stock price movement and the real live view and application of it within the stock market. been here for the last 3 hours? No one.